The IRS just released the 2023 tax brackets, and this is a really big news because it will affect how I withdraw from my investments when I'm in my early retirement. So the IRS adjusted not just the income tax brackets, but also adjusted parameters for long-term capital gains taxes, gift tax, standard deductions, and many more due to the high inflation we're seeing in 2022. So first, the standard deduction for married couples filing jointly will go up from $25,900 to $27,700. That's about an $1,800 increase. And the standard deduction for single individuals will increase from $12,950 to $13,850, about a $900 increase. These are all 7% increases from the 2022 tax year, which is significant because we normally only see a 2 to 3% increase, and we're already at the 2025 level, right? So basically, your taxable income is decreased by $900 for single individuals and $1,800 for married couples filing jointly. And second, the healthcare flexible spending account will also increase from $2,850 to $3,050. And this is also the FSA that you normally have with your employer, which is in pre-tax dollars. So now you have $200 more in 2023 to pay for your qualified medical expenses like your deductibles, co-pays, over-the-counter medications, prescription medications, and personal care items with pre-tax dollars. So just keep in mind that FSA is different from HSA, and you can check out this video about the differences between them, and I will put the link in the description below. The next one I'm going to go over is the income tax thresholds in the tax year 2023, and just keep in mind that the tax rates will expire by the end of 2025 under Trump's Tax Cuts and Jobs Act from 2017. I'm going to go over the capital gains taxes right after this part of the video because I'm definitely excited about that. But in 2023, single individuals with the 10% marginal tax rate will increase from $10,275 to $11,000. And it's twice that amount if you're married and filing your taxes jointly. And if you're in the 12% marginal tax rate, it'll increase from $41,775 to $44,725. And 22% will increase from $89,000 to $95,000. The numbers get bigger if you're in the higher tax bracket, and most people in their fat fire journey are in the 24% tax bracket or higher, and the threshold increases from $170,000 to $182,000 for 24%, $216,000 to $231,000 for 32%, $540,000 to $578,000 for 35%, and anything above that is 37%. And let me give you some examples to calculate how much money you'll save in taxes next year, and assuming your income remains the same. But don't forget to download my financial independence resources for free by visiting firesightchat.com/contact. You can also check out the Fireside Chat shop if you're looking to start your own YouTube channel, and I have all of my equipment at firesightchat.com/shopping. I used to misunderstand the tax system that if I made $100,000 a year, then the IRS took 22% of that every year, and that's not how it works at all. 22% would be my marginal tax rate if I were single, and my highest tax rate based on where my income lands in the tax brackets. Okay, so the effective tax rate calculates my blended tax rate based on my income through each bracket. And let me give you some examples with $100,000 in gross annual income. After the standard deduction of $13,850, your taxable income is actually going to be $86,150. So your first $11,000 will be taxed at 10%. So it's $1,100, right? And between $11,001 and $44,725 of your income would be taxed at 12%, or $4,046.88. And between $44,726 and $95,375 of your income would be taxed at 22%. And because your taxable income is $86,150, then you're going to be taxed $9,113.28. Your total federal income tax will be $14,260.16. And the marginal tax rate will be at 22% because that's the highest tax bracket that you're going to be making with $100,000 with the standard deduction. And in 2022, your $100,000 after the standard deduction is $87,000 in taxable income. Your effective tax rate will be at 16.96%, or I'll just call it at 17%, with a total of $14,768 in federal income tax. And starting in 2023, your taxable income after the standard deduction will be $86,150 because the deduction is going to be increased by $900 for single filers. So if I divide $14,260 by $86,150, and that should give me 16.55% in the effective tax rate. So I'm saving $508 in total federal income tax and about 0.5% in effective tax savings. And by the way, if you need help with your personal finances, like budget, savings, and investments to achieve your financial independence, you can schedule a free one-on-one 20-minute financial coaching session by visiting firesightchat.com/coaching. The long-term capital gains taxes for the year 2023, specifically in the 0% tax bracket, is going to be increased from $83,350 to $89,250 if you file your taxes jointly. And this is almost a $6,000 increase, and probably the biggest increase in a year in probably decades. And I care about the capital gains tax rate thresholds because if you've been following my channel for a while, you know my primary income for my early retirement is going to be the qualified dividends. And at this pace of inflation, the income threshold for capital gains taxes by the year 2031 is going to be over $100,000 for married couples. So if I do the reverse math and assume that my dividend portfolio is going to be yielding, we'll just say 4% annually, okay? And I could have $2.5 million in my portfolio paying 0% in capital gains taxes. And if I just use the 2023 tax rates as an example, my first $89,250 would be taxed at 0% for my qualified dividends. And if I made $100,000 in dividend income, then that $11,000 or so would be taxed at 15%, right? So, or it will be around $1,600. Do you see how much I could save in taxes with dividends and long-term capital gains? And I'm probably not going to have any active income from a W-2 when I'm retired, right? So my effective tax rate with $1,600 would be 1.65% out of that $100,000. And just imagine living in your retirement without ever having to work again and only paying 1.65% in capital gains taxes. I think that life would be pretty good. Wouldn't you agree? And you can also check out the other increases in credits and thresholds for 2023, and I'll link this document from the IRS in the description below. You can find the new rates for the child tax credit, earned income credit, and excessive investment income. And what's really interesting out of all of this is this standard deduction going up to $27,700 for married couples filing taxes jointly. It's almost impossible to make itemized deductions unless you have a really high income and making outrageous donations or other deductions, right? And the other tax credit, and you want to look for is the 2023 EV tax credit if you're looking to buy electric vehicles. And there are income limits to receiving EV tax credit, which are $150,000 for singles, $225,000 for heads of household, or $300,000 for married couples filing taxes jointly. And another thing I want to mention is your Social Security deduction, which will affect your paychecks in 2023. The Social Security Administration said the minimum amount of earnings subject to the Social Security tax will increase from $147,000 to $160,200. This is a huge increase at 8%, especially with the cost of living adjustments for retirees at 8.7% starting in 2023. So if you're an employee of a company, the maximum Social Security withholding will be $9,932.40, which is 6.2% of $160,200. So if your income is, let's say, $200,000 and you only get deducted for the first $160,200. So your paycheck will basically increase by 6.2% when you hit that threshold before the end of the calendar year. And the other one is the HSA, or health savings account. And the contribution limit for single individuals in 2023 is going to be increased from $3,650 to $3,850. And the family plan is going to be increased from $7,300 to $7,750. In a few weeks, we should find out what the contribution limits will be for IRA, 401k, TSP, and other retirement accounts, as well as the income limits for the Roth IRA contributions. And if you're on the FIRE journey, you should be very excited about the increase in contribution limits. And because it means that it's going to take me one step closer to retiring early. And as soon as the IRS announces those numbers, I will let you guys know on this channel. But in the meantime, you should check out these two videos and learn how to invest for your financial independence. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.